Hi, this is Zak Mir with the US penny stock highlights for Wednesday, the 5th of August. Starting off with the Golden Bull, which is living up to its name with the recent price action, hitting the top of that trend channel from January around the $4.40 mark. End of day close above $4.40. We could have an extra push for the stock towards $6, which is that line of resistance from this time last year on the daily chart. If you're looking for a money management point, probably back below the recent $3.70 resistance would do the trick in terms of keeping the risk profile under control. On to a stock which is new to us here at the penny stocks, comes in the form of EnLink, and it's nice to see the shares just starting their journey, breaking through the 50-day moving average there at $2.60 and heading hopefully towards the 200-day moving average around $3.57 over the next couple of weeks. Big target here over the next month to 2 months is up to $5.33, which is the top of that trend channel from the beginning of March. Stop loss at this stage back below the price channel floor, 234, or obviously back below the 50-day line around $2.57. Next up, a stock which I believe I've covered before. Obviously, there's so many every day here, but we got FOSL Group limbering up here at the bottom of the range. You can see if I magnify the situation, broken out of this recent, I suppose, falling wedge is what the best description there. And that line of the top of the falling wedge at $3.75. Initial target, the 50-day line, $4.24, and after that, looking at $5.67 at the 200-day moving average. Best case scenario over the next 1 to 2 months, up to $9 at the top of the early 2020 price channel. Stop loss on the buy argument back below $3.20 should cover it. And on to a situation which is looking pretty healthy at the moment. Houghton Mifflin, with a strange name, but at least here we've broken that neckline resistance from the middle of March versus the $3.25 level. And while we're above that on an end-of-day close basis, looking for the top of the rising March trend channel up to $5.30. At this stage, really, as I said, only back below, well below $3.20, really hurting the breakout, the neckline breakout scenario for the shares. Looking on to a stock which I covered, I think, a few days ago, but making some progress at the moment. Peck Company. Here we see that it's dithering a little bit at the bottom of the channel there from February, but an end-of-day close above that resistance line from June around $4.60 should be enough to get the stock on its way. Best case scenario target up to $8 over the next 1 to 2 months, and that upside valid while we hold above the floor of the price channel from earlier this year, and an April support line there at $3.96. Pacific Ethanol is next, and stock that looks quite encouraging at the moment. The latest encouragement provided by the way that shares just went to sort of try and fill that gap through the gap that was left last week or the week before last. Support there coming in at 185, while we're above that on an end-of-day close basis, looking at that May resistance line projection currently pointing at $3.58. So reasonable risk-reward trade on the cards for Pacific Ethanol. A couple of stocks now that we looked at before, which is normally good news. Riot Blockchain hitting the top of that rising trend channel from earlier this year, from the end of January to be precise. So that was at $4. We actually overshot that a bit, but the reward here for ambitious bulls would be an end-of-day close above that January resistance line and $4. We could get an extra new leg to the upside, up towards 1 year resistance line projection at $6 plus over the course of August or September. If you're thinking of a stop loss, probably at this stage, the best one would be that June peak towards $3.30 on an end-of-day close basis. Next situation is Transocean Limited. Here we've got the stock nice situation in terms of the stock just breaking out of the near-term triangle, also breaking above the 50-day moving average at $1.98, at least while we're above the 50-day line. Looking for an initial target there at the 200-day moving average at $3.30, and the top of this year's price channel up to $4.50, that March resistance line on the daily chart. So it looks like a nice risk-reward situation there, risking around $0.50 to try and make, I suppose, a couple of dollars at best, maybe, if we're lucky on that situation. On to definitely a new name for the penny stocks. The following stock, Team Inc. And here you can see that we've broken out of that near-term triangle. That's versus the $4 level. Also broken above the 50-day moving average at $5.32. The view at this stage is, at least while we're above recent July neckline resistance around $4.60, we could hit the top of the rising trend channel from April up to $8 over the next 4 to 6 weeks. The stop loss preferably, as I said, around the $4.60 area. Finishing off with ZAGG as the which is the ZAGG Inc. Actually, here we've got nice break of the recent tight consolidation for the shares at and below the 50-day moving average and the $3 level. While we're above $3 on an end-of-day close, looking for a March resistance line projection target at 532. Also, the level of the 200-day moving average. So things tying in quite nicely for the stock as long as we remain really above the $3 to $3.10 area. That's it for me today. More updates tomorrow.